Morning, everybody. It's the 4th of November. We're Signal Centre Talking Ball. I'm Joe, joined by Steve this morning. How you doing, Steve?
Yeah, not bad, mate. I heard a virtual cheer when everyone just saw your face on there.
Really?
I think they've had enough of me all this week.
Has it just been you this week? Tash been off, hasn't he?
Yeah, Taf's been off as well. Yes,
Oh,
so
okay.
yeah, but it's been okay. Sort of like tried to uh, muddle my way through the FX markets. Cool, they're difficult, aren't they? Especially with the obviously the Fed, Bank of England, and all sorts going on. So, but it's been yeah, it's been pretty sort of. I don't really know. We'll discuss it a bit further when we go to the headlines. But yeah,
Yep.
don't know. I've got my views on a few things like normal.
Yes, that's good to hear. All right, well done for holding the fort. Anyway, let's get stuck into the latest headlines and then we can take a look at some charts. It's bloody cold this morning, I know that much.
It is. It
Um,
is.
Okay, so headlines today. So the Bank of England was obviously the headline feature yesterday, and as expected, they increased interest rates by 75 basis points, taking the overall rate to 3%. That was in line with expectations. The members voted against the decision. Two members voted against the decision, voting for a 50 basis point hike, while another wanted a 25 basis point hike. The two dissenters were concerned that the economy was already weakening, and there were concerns over the risk of tightening too aggressively, given the lags associated with monetary policy.
And
The
there was
guide,
concerns over their mortgage payments, I think, as well.
yeah, quite possibly. Yeah, I'd be surprised if they've got mortgages. Um, Okay, the guidance afterwards from Andrew Bailey was considered quite dovish. The bank warned that the economy was likely to be in recession for 2 years, although the pessimistic forecasts were based on market rate pricing, and these expectations have already declined since the report was prepared. The bank again pushed back against market expectations with comments that it did not, it did expect rates to increase further, but not to levels that are implied by markets. I think I saw the mortgage rates for a new deal at the minute around about 6.5%.
Yeah, I
The
mean that's
bank,
it. Just feels ridiculous, doesn't it? Because I mean, I watched Bailey's comments yesterday. Rather than dovish, I just describe them as boring, dull. Just
it's
like,
usually the way.
just like he just like wants, says one statement. It was almost like he had one sheet with one statement. He just kept turning pages. I was scratching my head, and the overriding thing for me, Joe, is that the raising interest rates isn't going to fix anything. It's sort of like we've been sucked into this low interest rate environment. If raising interest rates to 6% is going to cause what is concerned, basically going to be a housing market collapse or people to default on mortgages, then why wasn't something put in place in the first place to warn mortgage people who are taking on a mortgage that they won't be able to afford it if interest rates go to 6%. 6% isn't a sort of like an outstandingly, grotesque level of interest rate for mortgages. So I think there's a real lack of there's a big failing from the government, Bank of England, in sort of in what's happening right now. And raising interest rates isn't going to stop you going and filling your car up, or you still have to fill your car up to get to work. You still have to sort of like go out and eat.
Yeah,
People aren't going out and just spending unnecessarily. That's what interest rates should stop. The sort of like the exuberant spending, as Greenspan used to say.
yeah, absolutely. It's going to
Go on.
be a tough few months ahead, that's for sure.
Yeah, I mean, and they're talking about like a 2-year recession. Isn't that depression? I mean, I'm sort of not a fundamental guru, but that sounds like a depression. It's not a recession. Stop
It certainly
stop
will be
calling it what it's
depressing
not. It
for
will
a lot of
be. Of
people.
course it is. You're sort of talking about that. Just call it what it is and do something about it. What can you do about it? I don't know. I think you've fucked it up enough so far anyway. So yeah, anyway. My soapbox is wobbling a bit, so I'll let you carry on.
Yeah, that's I don't know what to say about it. I mean, obviously we'll find out what really happens and the true effects of it, not for many months really. But obviously sterling was under pressure off the back of all of this. It dipped sharply after the press conference with Governor Bailey undermining the currency, especially with fragile risk conditions also contributing to selling pressure. We had some mixed data yesterday from the US on the ISM front. The manufacturing index declined to 54.4 from October, which was 56.7, and it was below the expectations of 55.5. There was significant slowdown in business activity and new orders growth for the month, with a small increase in order backlogs. The dollar retreated from intraday highs. Further strong gains yesterday as the hawkish Fed policy continued to boost demand for the US currency, with the index hitting a 2-week high. There was a recovery in Asian equities, which helped trigger a tentative dollar retreat early this morning. It's non-farm Friday today. The latest US employment number will be released later, with consensus forecasts for an increase in non-farm payrolls to around 200,000, with the unemployment rate edging higher to 3.6%. The Swiss inflation number retreated. Consumer prices increased 0.1% for October, which was below the expectations of 0.2%, with the year-on-year rate retreating to 3% from 3.3%. So that's pretty good for them. And we've had another rate hike, this time from the Norges Bank, who increased interest rates by 25 basis points, taking the overall rate to 2.5%. So that was it for the latest news. Where shall we kick off today, Steve, on the charts? What's grabbing your attention this morning?
Don't know, I'm a bit distracted about what I've just said. But let's try and focus. Try and focus, Stevie. Just like, let's not talk about what, where Rishi Sunak's, already trying to sort of get us to pay back what happened over COVID lockdown. But I mean, the thing about that is, there's one little point I want to make about that. There was billions spent supporting the economy. Fantastic. Well done. There was billions wasted. There's so many investigations going on now into people who were able to access them funds, not to support their businesses, but fraudulently to try and just take money out of the thing. And they were allowed to do that. So whose fault is that? Is that the taxpayers' fault? I don't think so. So,
I mean, are there investigations going on? There must be so much of it.
Huge. There's billions. Billions have been sort of like stolen. But that's sort of still wrapped up in the bigger number. This is how much we supported the economy by. So we need to get that back. Do you want to pay for it, or do you want your children to pay for it? Like that sort of like making you feel guilty about your children having to pay for it.
Yeah.
So, it's there was a lot.
Have you heard of people being investigated then? Have you?
Yeah. Loads. Okay. Can't give away too much detail. So, but there is in the papers. There's loads of stories of people have sort of like taken like millions. One person setting up 6-10 different companies, getting an accountant to put fraudulent accounts in, and getting the money sent over the next day. It's like it wasn't even checked properly. I mean, there was a lot of panic. Everyone sort of like was rushing around. Oh, you've got to get jabbed, Steve, because otherwise you'll pass it on to someone else. The jab was never tested for how it passes it on. It's like been admitted now in European Parliament that this is an issue. These are things that are sort of like we've been sort of like lied to, and we haven't been supported in the right way. And we're going to pay for it. I mean, I think there was one story of a news headline that some flights, I don't know who it was, one airline's not going to let people who've been jabbed on the plane because there's a risk of blood clot.
Oh, wow.
It's like, oh, what? You didn't let us on because we didn't have the jab last year. It's like ridiculous. Anyway, stop it, Steve. Just get on with what we need to know about.
Let me have a go at FX, shall I?
Yeah, do you want to have a go at FX? Go on in.
Yeah, I mean, I've glanced at the charts while I've been away a little bit, but obviously dollar index still continues to move to the upside. There was, threat, I thought, of a double top forming here, particularly on this candle back last Wednesday, but then it just rallied as it always does and continued to move to the upside. And we've seen 6 consecutive days of upside since then. Bit of retreat so far today. Obviously, still not making new highs, but overall looks pretty strong to me. So I can't see there being too much to be worried about at this moment in time. But of course, non-farm payrolls today could mean we're in for a volatile session with this, and it still could be in the process of forming a top, but no clear evidence of that just yet.
What's your gut feeling, Joe?
New highs.
Yeah, exactly, same as me. It's sort of it does feel like it's trying to top, but I just can't see it. But anyway, no. Yeah, go on, carry on.
Trend is your friend, Steve, as we know.
Yeah, exactly.
Euro US dollar. So that looked like it was breaking out of this channel, moving to the upside. potentially forming a double bottom as well, then pretty much just gave it all up on the 27th, and then we've seen 6 consecutive days of downward price action. So again, flip side of what we just seen in the dollar index, my gut expectation here is for probably a move to new lows.
Yeah.
I was really convinced by this, thinking we were going to see a decent rally
Yeah.
in risk, and obviously it hasn't played out. So again, still potential really for this to be forming a bottom, but it's certainly not a straightforward one, and throwing in a few curveballs. So for now, still looks like lower prices are set to be seen. Again, non-farm payrolls is a key feature in today's session, so that could have a pretty big say. Looking at cable, this is again, looked like it could have been forming a bottom, broke out through resistance at 114.95, got as high as 116.00 pretty much, and into downtrend resistance, and that was the cue to sell. Since then, we've seen a continuation lower. Big move to the downside yesterday, created by obviously the Bank of England's comments and the move on interest rates, and again, looks as though this could be heading back towards lower prices from here, I would say. So
yeah, I mean, for me, that 114 level is the key. That was the swing low from back of in the pandemic. The pandemic low was around about 114, and that looks to be pivotal now. And for me, it's like stay long above it with a tight stop, and go with the flow below. That's what it does feel like we're going.
So
And
that
I
red
think,
line there. So yeah, what was that? That was
yeah,
there's low from back there in
yeah.
March.
I mean, for
Lows.
me, that's key. And I've talked about the double top on this, the overriding double top from them highs that we hit, got up to 143.
Yep.
That gives a measured move of up to 85. Now
Yeah,
that's
we did this, didn't
frightening.
we? This double
Yeah,
top here, and yeah, it was down at. Oh, I've got 84.45 on that. So scary
yeah.
stuff.
It is. It shows you where the thing is. And I don't think Bailey helped really yesterday. He's sort of like, it was a little bit, just going through the process. It needed to be more. More sort of like, there needs to be more structure behind it. I know the Bank of England have got certain powers, but they are sort of like, they report to the government, and it feels like that power's sort of like being grabbed back by the government to some extent. So I'm sure we'll sort of like see, them sort of like progressing and sort of like having their differences of opinion over the next few months. But yeah, it doesn't look great. And we're sort of determined that sterling against dollar is determined with interest rates. If the dollar keeps raising, you've got no choice. You can't stop at 4% if they keep raising. And
No.
if you do, we're going to see 85.
Yeah. Okay, let's have a look at some of the other measures then. Aussie seems to be on the front foot today. Aussie dollar up by over 1%, but still no real sort of turnaround on this. Broken down through this support at 64.61, then acted as a resistance, although we see a little bit of an overshoot of that, but looks to be moving down. I would be targeting probably this 78.6% fib level. Looks to be, as we can see here, trending lower, and therefore lower prices are expected. The key low is from the 13th of October, which comes in at 61.69. So no signs of that slowing, although pretty decent turnaround today. Look at New Zealand dollar, that's up by 0.9%. Again, still, trending very much to the downside. We saw a decent push up in recent days, but we saw this candle here, a big shooting star candle on the 2nd of November, and then prices have continued to move lower, although engulfing all of yesterday's gains, maybe a little bit of hope there for the bulls, but ultimately I think given that we've got this longer term downtrend, a move down to 54.69 looks likely. Let's just have a quick flick to the weekly chart to see why that level was relevant, and there we can see it was the lows created at the pandemic, or the height of the pandemic. So that looks to be pretty much in vision, and I wouldn't back against it hitting that level in the near term. Looking at dollar CAD, looked to be forming a bit of a top, rallied into this big level of resistance around 138.37 to 138.55. Not doing an awful lot. This is the big level I'd look for on the downside, 135.02. If it does break down from there, then maybe we're looking for a bit of a correction. It looks to be forming a nice little head and shoulders there, but it's still pretty early to call that. So keep an eye on that 135.02 level for now. Dollar Swiss broke through resistance at 100.64. So that's the highest close we've seen in some time. Obviously, we did have a decent look above it on the 21st of October, but then retreated back below. So that's a pretty significant move higher today. Maybe we'll get a retest of the newly formed support at 10068 and then see a continuation higher up towards this resistance level at 103.33. And that level was last relevant all the way back here. I'm going to find it. Yes, these two highs that we saw actually in 2015 and 2016. So bring that level into focus now, and no signs of that slowing down. Dollar yen, should finish up on that. Obviously, we saw new highs back here, then we saw the intervention, but prices have really stabilized above 145.90, still holding on to this uptrend. Still looks as though we may see a continuation higher on that. So the intervention that we saw from the BOJ not really having the desired effect, and none of us were surprised by that because any attempts at intervention previously from them haven't really worked, and that continues to be the case. So still looking for higher prices on that, I think.
Yeah, it feels like they're talking about different ways of intervention as well. So I don't know what plans they've got, that which would concern me if I, you know, had sort of any sort of yen exposure. So yeah, it may not be sort of like intervention in these markets, but it'll be intervention in some sort of way. It won't be just like supporting the currency. They could do something else. Who
Yeah,
knows?
sure. Okay, I'll leave it there for FX. I will take a proper look at the charts over the rest of today and be more prepared for Monday. And Steve, you can take a look at some other markets for us.
Yeah, lovely. We'll dive into Bitcoin initially. I did the gun-to-head trade idea on this. That was quite an eventful one. We can talk about that in a minute. And we have basically seen the potential for a bottom in place. Obviously, we've got this 17,600, which is the key support level. Just let my dog out to bark at the neighbors. And then we've now got this 2000 level, which we can see on 1, 2, 3 occasions it's held just in front of. So that's, for me, that's a short-term pivot level. As well as this top. If we did put the Fibonacci extension tool on there, I only really put it on there to show where the potential was for this double bottom formation, and that's up at the previous swing high from 13th of September at 22,780. But it also shows a 127 Fibonacci extension, which worked really nicely if you were looking at that, and there's 161 up here. So at the moment we're looking at the high there, 21,078 as a break of there should see the extension higher continue. Otherwise we've really got to hold on to 2000. That's the key for Bitcoin. Commodities, gold was also interesting. Let me just get rid of this. That was just I was showing someone how to do something yesterday. We're at a key level for this as well. We've got this overriding double top formation. We're below the neckline. It feels very, very similar to what we're seeing in cable. So we've got this sideways price action. We've got support coming in above 1615. We've had 3 occasions now. I don't know what these arrows are doing on here. I'll try and work out what they are later. We've got 3 occasions now where this has acted as good support. And really that's sort of like telling us a break back above the 1675 level or through this resistance level should open up the upside. And then the next challenge would be 1730 to 35. That would be the next real solid area of resistance to watch. In the meantime, we're just watching this 1615 level. So it's quite a big range to be concerned about, but we're still within this downward channel on gold. I can't see that breaking anytime soon. If it does, we get a break above 1735. I think that bottom would be quite a nice bottom in place, because then we'd have the 1615 level as a key head, and the right shoulder as well as the left shoulder will be around the 1675.85 potentially. So lots of things to do to play out, but it's a complex formation. So you've got to stick with the trend as it is. So that's selling rallies in gold. Crude oil is also, I mean, both of these obviously very much affected by what the dollar's doing. So if the dollar strength continues, that will apply pressure to both gold and crude oil. We've got a nice little short-term trend line which has been respected on 5 occasions. So that's looking pretty good. Today it comes in around about 85.65. The resistance really today's high and 2 out of the last 7 previous days have got the high around about the same level. We're talking about 89.35 to 80 to 90. So $90 we'll say is the level of resistance. If we do get a break above there, I'd quite easily see it getting back up to the 92.66 level. That was the high from the Monday the 10th. So yeah, this looks like a nice, again, inverse head and shoulders. So that's the formation to watch, but we're only in the process of building that. So can't jump in just yet unless you're mad like I am sometimes. But yeah, let's take a look at indices now. The DAX, again, the weekly chart really highlighting this key level of trend line resistance, which we broke and closed above last week. So that was pretty positive. However, we are under a bit of pressure. It made a new high, a high we hadn't seen since the week of Monday, the 12th of September. The 38.2% Fibonacci retracement comes in at 13,500. And that's really sort of like around about where the real resistance is, up to 13,600. Price action yesterday did look pretty poor at one point. However, we are getting this almost like a morning doji star reversal formation. Now, normally you'd see these at the low of a trend. Sometimes you see them into trend, but the rally higher has been very acute. So I would expect this to sort of like have a little bit of a retest of the support level, which comes in around about 13,000, just above there. Resistance above is a nice big wide band of resistance, 13,365, all the way up to 13,565. So, but looking quite positive at the moment, 13,210 trading. But non-farm payroll, I'm not really sure where that will end up today. Over the last 4 days, we've had negative price action in Dow, although we did get a little bit of a rally into the close yesterday, forming this bullish hammer. And again, this sort of formation or this candle looks much better when it's at the bottom of the trend. This is a really short-term trend. So on the short-term time frame, you'll probably see a nice little bullish hammer looking about. No, you've got a bearish outside candle on the 1 hour. So that's an even stronger sign of a reversal. For me, 32,234, it would be the resistance level. Again, you can see quite a nice inverse head and shoulders here. So this is the spike we had over the Fed meeting. Got the left shoulder, nice neckline, neckline for before the right shoulder's formed. And yeah, let's spread that out so we see that sort of like where that neckline is. Now, for me, I prefer to look at the neckline between the head and the right shoulder as the key level, 32,173. But really, if you were to play this as a strict analyst, you'd say a break of 32,117 on this hourly chart, on this hour, would be significant and would confirm this inverse head and shoulder, especially if we get a close above it. That's key. So while we're below it, this is still failing. If we do move above it, we get a non-NFP figure or employment figure, which is positive for the market, then go with the flow. But I wouldn't be surprised if we do sort of like any good news is smack back down with the prospect of higher rates in the future. For me, the Nasdaq isn't performing as well. We've obviously got the tech sector heavily involved in the Nasdaq. Over the last hour, we've got a bearish engulfing candle, so that's not saying the same thing as everything else. S&P again has that same shaped inverse head and shoulders. Let's draw it on there just to clarify what I'm talking about. I hope this makes sense. That shows it above, it's actually above the neckline. And so that's positive. That is almost there. That candle's a buy signal. However, gains the next hour were completely engulfed and we're back on the back foot. But that should be a positive with a tight stop below there. That's a way of trading that. However, again, I'd prefer to see a break of 3,750, and then 3,775 would give me much more confidence that we could see a rally back. The spike higher over the Fed was up to 3,900. Wasn't bad at all. You know, it's funny, we're still down in these lower levels, and we're talking about levels up here. I dread to think what happens when we dive below here. Doesn't look like much. Bit of vacuum. That's me.
Okay, thanks, Steve. Yeah, so I don't know. I still feel like there might be a risk rally on indices. I don't
Yeah,
know.
yeah. I mean, I've got end of year rally in my head. I'm still thinking about that. So, like yesterday, I mean, I've had a sort of like small short gold position for a while, and I've cut out of that yesterday, round about the sort of support levels that we were talking about. And I've sort of dived into DAX,
Okay.
or DAX, or one of them. But I don't feel
Specific.
confident. Yeah, one of them, Nasdaq or DAX. No, it was DAX actually. I wish it was Nasdaq. I feel more confident being a bear in Nasdaq. But yeah, the stop's pretty tight, so I'll probably get stopped out of that over the volatility over non-farm. But you know, just got to stick to it, stick to the plan. Yeah, I think keep looking to sell rallies in the indices seems to be the way to go, and I don't think it's going to change anytime soon. But you could get that really monster rally into the end of the year. Why not? So
Maybe.
yeah, it's a tough one.
Yep. Okay, gun to the head challenge then. So this is where we all pick trade ideas live on the video, as if we had a gun to our head. So we've got to come up with something quite quickly. All the ideas are placed at market. They all have stops and targets, and they're all uploaded to our TradingView profile if anybody ever wants to check them out. All the risk reward ratios on these trades must be in excess of 2 to 1. It looks as though you guys have had a pretty good run while I've been away, so maybe I should go away
You
again.
guys,
And
it's just me, mate.
Taff, I think, was there for a couple of
Oh
days and had a
yeah,
couple of winners.
Taft did
Um,
okay actually. Yeah.
this is the overall P&L now, so it's made new highs. That's not
Way
quite. I mean, we've been in a serious period of drawdown, unfortunately, for some
for a long
time with
time.
this. So we're now up 185% since we started way back when in October 2019. So we last hit a peak around October 2020, so a year in. Then we've spent pretty much 2 years going sideways. But in recent months, it's been moving to the upside, and finally we've broken to new highs. So decent consistency, I suppose. But yeah, that's quite nice,
Yeah,
really.
I think the markets have feel like they've been a little bit fairer, or sort of like maybe a bit more technical
Yeah,
more recently. You know, we love a trend, and you know, trading the trend is always like, for me, is the best thing. Sideways markets are killers. So,
yeah,
but
absolutely.
yeah, this was fun. This Bitcoin ride yesterday.
Yeah, so this is your Bitcoin trade idea. You were selling, you saw the bearish engulfing candle on the hourly that stalled at resistance at 38.2. And if we click the play button, we can see that it actually hit your target by 2 pips.
2 pips, yeah.
But
Love them tight spreads in in Bitcoin.
bit of a,
And
yeah,
then look what happened. Well, that's why I had to stop him. So
yeah.
yeah, no, hit the
So what we're
target. I
saying,
was
it was
well
a
chuffed with
target.
that.
Yeah,
But the funny thing was, I'm sure that the reason it stopped at that target, because all of our sort of like friends who are watching the show just thought this is the lowest it's going to go because Steve said that's his target. So they all bought
yeah.
it there.
Amazing you had that as a target, given that was the swing low there from.
Yeah.
So
And
you
why did
nailed
I
it
have it as a
basically.
target? The reason I had it as a target was because it was a nice round number.
Right.
It
Okay.
was 2.5 to 1 risk reward, Joe. That's the
Yeah.
reason I picked that level. It was in front of 2000. I wanted to do like 4 to 1 risk reward. Then I changed it to 3 to 1. Then I changed it to 2.5 to 1 because I wanted to be in front of that 2000 support level,
Okay.
20,000 support level. So that's the reason it was lucky.
Yeah. Lucky. Make your own luck, Steve. That was a
It was
good
lucky,
trade.
but it
So well
had
done
odds
to
of
you.
2.5 to 1 luck. So that's
Yeah.
where it worked.
Okay. Right. So 2 new ideas being served up now. I've had a little bit of a look around, and I'm kind of toying between this, which is dollar CAD. So I mentioned it on the daily chart that it had a head and shoulders top pattern potentially forming. It needs to break down below 134.95. What I quite like about this as well is that the right shoulder sort of rallied into a 61.8% fib level, pretty much to the tick, and sold off. But it hasn't confirmed it yet, so it means that my stop loss has to be above the right shoulder rather than above the neckline. The measured move of that is down here at 137.13. Obviously, we've got non-farm payroll, so this is likely to be quite heavily affected by that. So maybe I'll give that a miss and instead look at this, which is sterling Oz. Looks to have formed a nice little double top here on the 4-hour chart. Broken down below it, obviously we need to get a confirmation candle below that level, and I'm not going to get that until 9 o'clock. So I've got half an hour for it to try and hold on here. But I think this is what I'm going to go for to try and avoid directly being involved in non-farm payrolls. I know it generally affects everything, but I'll go with this, and I might have to push the stop loss just a bit higher. So I'm going to sell it at a current price of 176.60. My target is the measured move of the double top, which isn't strictly the measured move because I haven't gone from the high here. I've just gone by the sort of range that I've highlighted, which gives me a target at 172.40 with a stop loss at 177.92, risk reward ratio of 3.13. Obviously, if you wanted to go more aggressive, you could, and you were banking on this candle closing below this support level, then you could probably tighten it right up to that kind of level. But I'm not going to do that because I don't want to my first trade back to be a stinking loser. So let's give it a bit of a chance to play out, and that is my idea for today. Over to you, Steve.
You want to move your like graphic over to the actual candle, Joe, so it actually accepts it as the entry. Otherwise, you might go further. It might not think you've already triggered it. Do you know what I mean?
Yeah. And let's just cut that off at 9 o'clock.
Yeah, so I'm sort of like I'm in R-ing. The only thing really I would be bearish on the indices would be like Nasdaq. I think that's maybe a very high risk because I think non-farm payroll for me is always that if it's good news, we're going to get that spike rally. We're going to get people coming in and selling it. I just think that the selling opportunities are going to be too good to be true in terms of sort of like the bigger traders. So and I think there's yeah, like Joe said, there is potential for that sort of that grind higher. But I've got to go with Bitcoin again today. Sorry, fellas, but it gives you an opportunity to buy it when it hits my target again. So there's a good thing. So yeah, we got the downward trending resistance line. I can say that's although we didn't quite get to that line, I would take that as confirmation that this trend line does exist. You know, we need 3 points connected for that trend line. So I could go like, okay, there's 3 points connected, but it just spiked through that little one. But I'd rather just leave it like that, so you can see where if it does rally, we can see where the potential resistance would be if this really played out nicely. Also the candles, we've had a nice decent extension higher, inverse head and shoulders, easily achieved the target that it was supposed to, the measured move. And we've got the last 2 hours of candles have been hanging man candle. That's a bit of a concern. This one, shooting star candle forming. I know we've got like 27 minutes for it to complete the formation, so it could turn into something more bullish, but we've got a gun to head, so we've got to do it now. So I'm going to go short of this. And let me see what my target is. Oh, Joe, you know, I'm going to do it again, aren't I? 2.5 to 1 I've got to go for. So let's try and work out. There's the stop, 2.5 times that. Is it 55? How good am I at maths? So 2.5 to 1 risk reward, again, stepping in front of that 20,000 support level, giving it a little bit of room on the upside. So it has to take out this previous swing high of 20,800 to hit my stop at 20,845, or it may not, don't know. But yeah, that's my trade idea for the day. That's the one I fancy. A little bit of a pullback within this. It's a descending triangle, so yeah, it's basically really expected to break to the upside, but we know what triangles are like. They're they don't always do what they're supposed to do, as everything. So yeah, that's us. That's me. I'll publish that now, giving the reasons, and you'll be able to see that on our channel soon.
Yep, absolutely. That's signal_center for anybody that's not watching on TradingView, and you can see it here. I've just posted up my trade. Let's see if I can refresh that and see if it's there. There it is. double top on sterling Oz, and Steve's will be there very soon. So 2 new ideas there. Let's see how they play out. They close off at 9 o'clock UK time today, and then we'll revisit these on Monday. So for the day ahead, let's take a look there. We've got, as we know, the US employment number, which is out at 12:30. Obviously, the US clocks haven't changed yet. Normally, that'd be 1:30. And in terms of expectations, we're looking for an increase of around 200,000, with the unemployment rate edging higher to 3.6%. So these are the key numbers to keep an eye on. At the same time, we've got the Canadian employment number as well. And then next week, we've got an inflation reading in the US, which will be, of course, well watched. So that is pretty much that for today. No requests from anybody watching. Obviously, if anybody is watching, we're streaming every day at 8 o'clock UK time, AM. If anybody wants to get involved and let us know what you're looking at, and we can take a look at the charts, please feel free to post up. And in the meantime, everybody, have a fantastic weekend, and be careful for that non-farm payroll number later on today.
Yeah, cheers.
Cheers, everybody. Goodbye.
Bye.